Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today's intraday analysis video is for Wednesday, October 6th, 2010. Well, folks, as you can see, the markets are fractionally lower today. Again, we've seen a little bit of selling as the dollar initially was lower, but has come off the lows. That has pushed the market down after the monstrous update we had yesterday. Yesterday, the indexes were up around 2%, huge gains. Today, the markets are just fractionally lower. Dow down 9 points, NASDAQ down 28.5, and the S&P 500 down 4.5. Now, you can see, as I just mentioned, the NASDAQ is down 28.5. That's a big drop. But the S&P and the Dow are basically flat. NASDAQ is getting hit. Certain key NASDAQ 100 stocks are giving back a lot of the gains that they took yesterday. And just to give you an example here, what I'll show you is a couple of the NASDAQ 100 stocks getting hit today. Take a look at Amazon, folks. Amazon yesterday, this is where it was prior to yesterday. And look at the move up it had yesterday. Look at where it is today. Right back to gap fill, negating the entire move from yesterday. That's big, folks. When you're talking about a market or a stock that negates an entire move, that's what we call an engulfing candle and can be a bearish sign. So again, engulfing candle on Amazon.com. Other stocks having a small reversal today. You can see clearly you have Google. Now, Google hasn't had an engulfing because to have an engulfing, it would have to come down to gap fill from yesterday's gap up, and it's not even close to that. But it still is having a decent pullback of about $7.50. Apple Computer, small pullback today, down about $2.50. And BIDU, a little bit on the bigger side here as we bring up that chart. And you can see that's closer to an engulfing candle. You're basically at gap window. Gap window is another key support. For those of you that are in the chat room or in the research center, you should know exactly. When I see these terms from everything I've taught inside of that research center or that chat room, you should know exactly what we're talking about. And again, gap window is a key support. Gap fill is another key support. Both can be played as scalps intraday if you're talking about an intraday chart. If you're talking about a daily chart, then use it as a swing trade. They will work. And again, join the research center. $49.99 a month includes everything listed underneath that research center is included. You want to get on board here, folks, because the lessons learned will be things that you'll profit for life on. All right, now let's go back to the SPY. As I stated, the market today basically flat to slightly negative when we're talking about the Dow and the S&P. As you can see, the spiders opened up right around the flat line, pushed to yesterday's high, which is the blue line up here. That's going to be your resistance. Why? Because it's the pivot top from yesterday. All right, use your technical trendline analysis tools that we teach. Technical trendline analysis is the number one thing that I utilize in the market to make money on swing trades and on day trades. It tells me gap fills. It tells me key trendline, dual levels, pivot lows, double tops, double bottoms, trendline breaks on head and shoulder patterns, inverse head and shoulder patterns. Every key thing out there is all about trendline analysis. All right, so you got to know it. But bottom line is, notice how the top was put in right here from yesterday. You never got above that. The market's continue to bounce right in here. You can see the low level of 116 on the SPY being support initially. We gave that as resistance and support line over the last month. I told everyone 116 is your level to look for. Sure enough, yesterday it goes there, it hovers. We have now pulled back below it again to the downside. Now, we did have some economic news, and I want to go over that, folks, because it is important. Your economic news this morning was ADP private sector employment. It came in down 39,000. That was a little bit of a shock to the market. However, and this is the key, however, as soon as it came out, I heard a lot of key analysts on TV saying, oh, it doesn't matter. They kind of brushed it under the rug saying, oh, but there's always a plus or minus 100,000 there, so it could have been technically positive. Oh, let's wait for the unemployment number to see if it's really that bad on Friday. Now, again, that's just telling me there's an overextension or accentuating on the bullish side of this market, which is fine for now, but it does make me a little worried. We are a little on the overbought side. So be aware of that, folks. I do think that is something important that we must follow. In addition, as soon as you saw the ADP jobs number come out, and the futures did tick down a little bit, even though it was brushed under the rug, the dollar started to fall. The dollar fell pre-market then. That lifted the futures back to the positive line or the flat line and brought the gap up or small float here on the initial push up in the morning session. Now, throughout the afternoon or the early afternoon here, we have come down. Why is that? Because the dollar, after making new lows of the day and has really gone down sharply over the last couple months, the dollar started to come off the lows and started to bounce. As soon as the dollar started to bounce, the market started to fall, and that's what we are seeing. All right, if I go to the dollar intraday chart, take a look at this, folks. The dollar initially sold off, and the whole time, this is kind of unusual, because as the dollar was selling off here, really from the small gap down, which kept the markets flat, the market tried to rally, but it couldn't rally on a moving down dollar. And that's another signal that you have to pay attention to, is because the dollar has been the only reason why the Federal Reserve has been able to prop up this market. They are doing their POMO, which is permanent open market operations, buying tips, buying other things from these institutions, infusing money, which is used to prop up the markets. In addition, they're dropping the dollar. The dollar is something that they are in control of. But the point is, it seems like the dollar, which is the only thing at this point that they're really able to control themselves because they can print the money if they want to, the dollar dropping is having less and less of a push-up effect on the markets right now. And again, you can see clearly today the dollar is sharply lower here, and that really just had the markets flat on the day. Then the dollar bounced, and we are seeing that take the market down substantially from the levels that it was at. Take a look. That late day bounce, as soon as you bounced on the markets, this is where you started. Dollar bounces, markets come right in, and we're now hovering on this trend line. This trend line, by the way, was a key break level on the charts that we isolated. If I zoom out, I'll show you exactly where it came from. You had a long drop right here, and then a bear flag. When you broke this blue line, see how it's connected from the lows here? That was your breakdown, told us the bear flag was going to play out, and it sure as hell did play out to the downside. Then you got another bear flag, and the bear flag failed with a gap up above this green line. The green line got taken out. Guess where we are? Right back to that green line. That's the level of support. If you break below that, you could see some more selling in this market over the next couple days. So just be aware of that as we come in towards tomorrow. We get jobless claims tomorrow. If you come past tomorrow on Friday, you get the unemployment report, non-farm payrolls. This level, this green trend line, is a very significant trend line we need to watch very, very closely. All right, so pay attention to that in the coming days. Let's see if by the end of today, if we get below it, or do they keep it above. As you can see, it's hit it once. There's your bounce. As a scalper in the intraday stock chat, you need to have that line on your chart, and you need to scalp it. Why? Because it's the first hit. First hit really in a couple days ever since we got above it yesterday morning on the gap up. All right, that's going to be support. You play it. Look at the bounce you would have gotten. And again, these levels are put on the chart for our nightly members in the Research Center days in advance, if not months in advance. And again, it's all based on technical trend line analysis. You got to know it, folks. You got to use it. There's no other way. Now, as you're coming down to it again, would you be scalping the second level? The answer is generally no. Why? Because the second hit of a trend line is always weaker. The trend line will be weaker, and there's more of a chance of a breakthrough. First hit is 80 to 90% success rate. That's huge success rate odds. If you just play those, you will make money consistently if you know what you're doing in this market. And again, Research Center will teach you that, folks. Hot charts and alerts, daily market report, nightly videos every night, pro trader watch list, you name it, everything's included there. Some great calls out there as well to pay attention to. All right, now, as you can see, that's your intraday chart. You can see you're kind of trying to bounce again a little bit here, although, again, remember the odds are not as good that you don't break through. We'll continue to focus here. Goldman Sachs up today. One of the few stocks that's having a decent day today. We talked about NASDAQ 100 stocks are weak. The stocks that are strong today, and this is going to be important for you guys to recognize, you have to look at the sectors that are the strongest. The sectors that are the strongest are the financials, led by Goldman Sachs, up $1.58 right now, and the commodity stocks. Why the commodity stocks? Why is Chevron surging up again and having a good day, up 35 cents? Now, it's not up a ton. Yesterday it was up a ton, but why is it up again today? Why is Exxon, XOM, take a look at this. Why is Exxon up nicely today, up 44 cents? Because the dollar is weaker, folks. And when the dollar is weaker, we know that generally commodities will go up. Well, what happens to oil? When the dollar is weaker, what's oil doing today? Oil is positive, up 21 cents on the USO. Spot crude is up 42 cents on the day. What about gold, GLD? GLD is up 40 cents. Now, it has come in as the dollar's bounced, but gold up. All commodities will generally get a lift when the dollar falls, and therefore, if commodities are getting a lift, those stocks that trade or sell that commodity will get a lift as well. Therefore, Exxon, Chevron, and a bunch of these other oil stocks getting a bid and holding the market up. So, again, you're seeing a lot of weakness in NASDAQ 100 today, but not so much inside of the stocks that are related to the dollar and commodities or financials. All right, so that's really a little synopsis right there that I want you guys to understand. Let's go back to the intraday. You can see you're just hovering on top of this little level here. The level's really working amazingly well. Again, you can see the pivot top. Here's your 160 level. You hit it right here on the open, and you bounced off of it, hit it again, bounced up, and came down. Finally, after two hits of it, you kind of chopped around, chopped it across, went up a little, and then broke through it. In spirit of bear flag right there. Breakdown, bear flag tells you you're going to break down. 1, 2 inside bars inside of that drop bar tells you down, especially below the 50 and the 20 moving average. Down you go. Where do you go? Right to your green line. You get a little bit of a bounce. So again, folks, just a reminder, join the Research Center. $49.99 a month. Just alone the hidden gems is up 20% from the high, or from where we mentioned it up to the high. That alone pays for your subscription right there, let alone the other calls, the analysis, the education, the guidance, everything included right inside of there. Enjoy. We'll see you in that research center in my nightly video tonight, where I will give out new plays to go for. And again, have a great evening. Talk to you soon. Take care.